Hi, my name is Tina Michelle Moeller. I'm a recruiter and consultant with World Financial Group. Recently, I had the opportunity to have an interview at CTV and talk about the dangers of high interest loans. The interview segment was only a few seconds long, but there was a lot more that I want to share. So after losing my income due to an injury, I turned to high interest loans to pay my bills. This leads me to the only pros that I can think of. Pro number one is avoid NSF charges. So paying $5 in interest is much better than paying $35 to $50 in non-sufficient funds charges, especially if this is a recurring problem. But if you pay the debt off within a couple of days, then you won't be charged any interest at times. Pro number two is the process is quick and easy because high interest loans, aka payday loans, are fairly easy to get, even for people with a poor credit rating. Approval can take mere minutes and hassle is minimal. Pro number three is the relationships. Many of the staff at payday loan companies have phenomenal people skills. They're very understanding and compassionate. And when you require multiple payday loans, you build a positive relationship with the staff. Now into the cons. Con number one is the high interest. 59.9% is the legal rate in Canada, but does not apply to payday lenders. That can run as high as 400%. Using the rule of 72, a 36% interest rate will double a debt every 2 years. At 72%, that debt doubles every year. And at 400%, that debt will double every 66 days. Imagine borrowing $1,000, and if you don't pay it down, having that $1,000 debt multiply to $32,000 in a year. Con number two is the process is quick and easy, and that may sound familiar because it's also a pro. But as a con, it makes the option of getting these loans for non-emergency purposes tempting, especially for people who don't understand the dangers of compound interest working against them. We see this all the time with credit card debt. Con number three are the extra cost. On top of the amount you borrow, some companies add an administrative fee or debt insurance. At 10% admin fee on a $1,000 debt would be $100, which would defeat the purpose of using it to cover an NSF charge. As an insurance agent, I support insurance, but not when that insurance is 2 to 10 times more than a standard policy. If you're offered insurance on your high interest loan, just say no. Con number four is hard credit checks. Each time you take out a payday loan, a hard check is performed, which negatively affects your credit rating. Even though the effect is small, multiple checks over a period of time can impact your ability to get a lower interest rate in the future. Now for some general knowledge that is neither a pro or con. Needing a payday loan is a sign of a bigger problem. Poor spending habits, poor saving habits, not being properly insured or prepared for emergencies. These are all situations that can lead a person to use payday lenders. Meeting with a financial professional, and I will clarify, not one from the bank, because their job is to make more money for the bank, but meeting with a professional who puts your needs above their own commission, these individuals will help you get ahead short term and educate you to long-term solutions. Number two is high interest lenders target the most vulnerable. Now, the reason this isn't a con is because without payday lenders, most people, their only options would be to declare bankruptcy or do a consumer proposal. For some reason, banks don't offer relief to individuals with a poor credit rating who are struggling with debt. They are considered too high risk and are more likely to default on their loans. This is why payday lenders can charge so much. They're taking on the riskiest borrowers who just happen to also be the most vulnerable among our population. These include people who have disabilities, new immigrants, and Indigenous as well. Number three is the amount you're allowed to borrow depends on your income. If your only income is a Canada Child benefit, some lenders will allow you to borrow up to $1,000. That's more than half your income. So if you're struggling to pay your bills already, how likely are you to pay off a high interest debt on top of that without needing to borrow more? If you would like to get out of the payday lending loop, please contact me, Tina Michelle Moeller, at support@moneymakeovers.ca.